Hi there, it's Brad Levin. So today I want to talk real briefly about the underlying strength of the trend in the stock market these days. Now last week we saw that the indices here in the US for stocks moved to new all-time highs. And that's great, but it's important that we take a deeper dive look and to get a better sense of the strength or weakness of the trend itself. What I'm talking about here is a concept known as market breadth. And breadth can be measured by looking at the number of stocks that are advancing versus those that are declining, or the number of stocks hitting new 52-week highs versus those hitting 52-week lows. What we're looking at is the number of stocks that are actually causing the tide to lift the boats higher in the market. Now, as of the end of the first half, there were only 6 stocks who represented over 75% of the gains of the year-to-date return on the S&P 500. That's not a very healthy environment. This year, what we've seen is that a lot of the gains have come primarily from the stocks in the technology and consumer discretionary sectors. Now, if you're investing in index-based strategies like index funds or ETFs, you're participating in the gains of the market wherever they may be coming from. This is an environment that is more conducive for passive strategies, and in fact, we've been in a low-breadth environment for quite some time. It's an environment like this that active managers are going to find a more challenging time at selecting those stocks that may be in the direction where the market is moving. The other thing that's important to understand about weak market breadth is that it's not a very healthy overall environment supporting the trend of the market. What we're looking to see here at this point is this trend going to widen out where there'll be more stocks causing the market to gain? Or alternatively, are we going to see the market being pulled down if investors decide to rotate away from those stocks that have been a favor so far this year? Now, what we're starting to see are early signs that investors are beginning to take gains from some of those top performing stocks in the technology, consumer discretionary sectors, as well as a few others, and begin to rotate into those other areas of the markets that have been underperforming, namely the healthcare sector, financials, and now most recently, industrials. This is a good sign, and I hope that we're going to see more of this continue. Also, I think that it's going to be very important that we get some resolution to the trade wars that are currently playing out, because right now that is the key factor upon which the strength of the market is trending. Thanks for taking the time to listen to me today.